Hello and Happy New Year. My name is Jason Mercer, the Toronto Real Estate Board's Director of Market Analysis. I want to take a few minutes of your time to summarize fourth quarter commercial, leasing, and sales results against the backdrop of broader economic trends. Let's start with the leasing market. TREB commercial network members leased almost 6.1 million square feet of combined industrial, commercial retail, and office space in the fourth quarter of 2015. This result represented a 19.6% year-over-year increase compared to the fourth quarter of 2014. More than 3/4 of all leased space was accounted for by the industrial market segment, followed by 12% for the office segment and 10% for the commercial retail segment. Year-over-year changes in average lease rates for properties leased on a per square foot net basis with pricings disclosed were mixed in the fourth quarter. The average industrial lease rate was $6.09 per square foot net, up substantially compared to $5.22 in Q4 2014. So while increased demand likely played a role, the key reason for the strong year-over-year growth in the average industrial lease rate was a number of deals completed for large spaces signed at above average lease rates. The average commercial retail lease rate was down compared to Q4 2014, and the average office lease rate was up compared to the same period last year. Now, moving from leasing to sales, there were a combined 235 industrial, commercial retail, and office property sales in Q4 2015, down by approximately 27% compared to 322 sales reported in Q4 2014. The number of sales were down for all three market segments. Year-over-year changes in average sale prices on a per square foot basis for transactions with pricings disclosed were mixed. The average industrial selling price at $87.37 per square foot was down by approximately 15% compared to Q4 2014. The average commercial retail selling price was down substantially, but this was largely due to a greater share of larger properties sold in the last 3 months of 2015 compared to the same period in 2014. Larger properties tend to sell for less on a per square foot basis. The average office price was down by 7.1% year over year. Now that we've discussed summary results for leasing and sales, let's take a look at the underlying economic context. It was a tumultuous time in Canada from an economic perspective in 2015. Nationally, we entered into and then climbed back out of a modest recession. The volatility in economic growth obviously had its foundation in declining oil prices, which hit the economies of Western provinces particularly hard. However, in other parts of the country, like Ontario and particularly the GTA, economic conditions were not so severe. The unemployment rate trended lower for much of 2015, suggesting that many firms in the GTA were taking on employees. This suggests that some companies may be anticipating stronger growth ahead, perhaps as a result of the lower value Canadian dollar vis-a-vis the US. Looking forward, it's quite possible that we could see an uptick in commercial leasing and sale activity in 2016 as the economy in the GTA and Ontario more broadly outperforms many other Canadian provinces. With this said, it is important to point out that after a good GDP growth result for the third quarter of 2015, a poor October result suggests that the rate of economic growth may have moderated in the fourth quarter. The continuation of economic volatility could slow some firms' real estate investment decisions. So what this all tells us is that there will be a lot to pay attention to as we move through 2016. I look forward to speaking with you again soon, following the end of the first quarter. Thanks very much.
Brought to you by GTA Realtors.